Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to this webinar where we're going to look at how accountants can gain from the introduction of business advisory services. If you have any questions after you've watched this video, please don't hesitate to contact me. You can send me an email, peter@essbiztools.com.au. So how can accountants gain from business advisory services? Let's look at a snap quiz. Did you read the CommBank Accounting Markets Pulse report that was released in May last year? It's nearly 12 months, isn't it? Did you plan to diversify in your firm? It's 11 months later. What have you done? I know there's been a lot of issues with COVID-19 and client demands for grant applications to be prepared and lodged, etc. But what have you done? As you probably found out, it's not easy to diversify your services, but please don't give up, because I think every accountancy firm in Australia should be facing up to the reality of needing to diversify the source of your income, because things are changing. We have ongoing improvements in software. We have ongoing improvements in communications. There's a lot of work being outsourced to overseas countries, and accountancy services relating to taxation services are being commoditized. So let's go back to the beginning. The Accounting Market Pulse report indicated that most firms that they had surveyed were going to be diversifying. In fact, 95% of those firms said that they would be diversifying in the next 2 years. Business advisory services is expected to be a key player in that diversification strategy. It won't be the only one, I admit that. Some firms will put more emphasis on financial planning and perhaps on audit work. Some could even go down the insolvency path. But the majority of the extra income is expected to come from business advisory services, which is really helping your clients to be able to improve their business operations. So what can your firm gain by diversifying into business advisory services? Number one, happier accounting team members. Wasn't that long ago, in fact, only in December, that Accountants Daily reported that 70% of accountants were looking at the marketplace, looking around, seeing what was going on, what other jobs could they be interested in. And I suspect that those accountants who were looking around were the more experienced ones, because they're the ones that have perfected their knowledge of systems and have got the ability to communicate with clients, to run webinars or seminars, who've studied various other products and services that could be offered. So they're the ones that are going to be the most employable. So one of the main priorities, I think, for you to think about is maintaining team member satisfaction, and morale is critical, unless you want to be constantly recruiting for team members. Andrew Geddes, one of the founders of the Financial Management Research Centre at the University of New England, and for the last 10 years was chair of Green Cross Limited, a company that he guided from starting advising them 35 years ago to become a top 200 ASX company, and is a well-known accounting industry consultant and mentor, believes that one of the problems that accountancy firms have when it comes to motivating employed accountants is that the work is not varied enough. The work needs to include compliance work, of course, taxation, very important that accountants in public practice understand taxation. But that's not what they want to do all day, every day, 45 weeks of the year. You need to try to introduce some other work like business advisory services because it is interesting and it is challenging. It is also a great activity for your accounting firm because you will be getting your fees from a diversified range of services. Because various commentators believe that if you just stick with 96 to 100% of your fee income coming from accountancy fees, the traditional terminology for annual accounts and tax returns, that there's going to be problems in the not too distant future. In fact, I understand that in the United States of America, there is already problems because the communication with their taxation authority with utilizing the computers is at such an extent that it's starting to eliminate work for accountants to perform in American accounting firms. That cannot be too far away from occurring in Australia also. So the challenging work is very important to help you on this journey. The Australian Financial Review reported that 95% of companies that applied to a crowdsourced funding intermediary were rejected for crowdsourced funding. Just to refresh your memory, the crowdsourced funding intermediaries have been appointed by Australian Security Investment Commission. There's 16 of them. 2 are very active and have the lion's share of the market, about 85, 86%. And there's 2 or 3 others that are doing small deals. I'd like to see the 16 of them flat out, because that way they'd be really helping SME businesses, and accountants should be claiming that work as work that accountants undertake. So what caused this problem to occur? Was it because they didn't understand, the clients didn't understand how crowdsourced funding equity operated and the intermediaries turned them down for that? Or didn't they have the required documentation properly prepared? Now, the required documentation, I think, is a business plan, which looks at the next 3 years, budgets and cash flow forecasts, which are linked to the contents of the business plan, and also look at the next 3 years. A business valuation, what's this company worth? Pre-subscription and post-subscription, because that information is going to be very important, because one of the first questions you're going to get from a client if you're advising them on raising capital is, what percentage of the shares do I have to allocate to the investors? The way you work that out is you value the company and its current value, and that will probably mean calculating future performance and then discounting back to a present value. And from there, determining a percentage of the company that these new investors are going to acquire. Now, first of all, you need to make sure that your client is happy and relaxed with that percentage. Then you would have to submit that information to the crowdsourced funding intermediary, and he or she would be making sure that they can sell that concept, that percentage, to the investors. There's other work, and that includes advising the company directors and leadership team just how crowdsourced funding operates, because this is new. Whilst it's been legislated now for 3.5 years, it is still new, but it's expanding. And it's a great opportunity because your client's not going to have to offer security to anyone. The investors are getting ordinary share certificates. There's no personal guarantees from the directors or any of the leadership team. There's no monthly repayments of principal and interest. So it all sounds good, doesn't it? So what happened? Why did 95% of the people that approached an intermediary get knocked back? Why were they unprepared? Was it because they thought their accountants were only interested in taxation matters? Because I really hope that the 95% that got knocked back didn't go along with accountant prepared documents. So I'm assuming that the companies hadn't gone to their accountant. And I'm also assuming that most of them would have had an accountant. I hope so. So what has gone wrong? On my calculation, based on the information the intermediaries have released, the 95% was 1,550 companies. 1,550. They missed out. That's a lot of interesting and challenging work, isn't it? That could have been done in an accountancy firm. And perhaps some of them would have dropped out when they knew what had to be done and they knew what it was going to cost. But they never got a Guernsey. They never got into the game. And that's a real disappointment and something that I think we all should take on board, because this could have been challenging work that accountants employed by firms, small firms, medium-sized firms, could have attended to. And that would have kept your team members very interested in working for your firm. This also raises a question, then what is your fee mix? Some firms are aiming for a 50-50 split. And I understand that at least one of the professional bodies is looking at promoting that concept to its members. The interesting thing, though, is Benchmarking.com reports that accountancy fees represent 96% of fee income from the average accounting firm. And that was a firm with an income of $2.2 million. So 96% was shown as being accountancy fees, which traditionally in the Benchmarking.com reports represents annual accounts and taxation returns. 2% of the missing 4 was for financial planning, and 2% was other income, which I assume included business advisory services. Not a high percentage, was it? Now, I know everyone doesn't completely dissect their income. I've been guilty of the same thing over the years. So I suspect the proper mix is probably 90-10. And I suspect financial planning might be a bit more than 2%, but that's the figures. So what are you planning that your fee mix is going to be in the new financial year, which is starting in about 2.5 months' time? What's your fee mix going to be? Where's compliance work headed? Pressure is building from the ever-improving software for direct communications with the tax office. And as I alluded to earlier, the stories I'm getting from America is that the software is now at such a standard that it's reducing the accountant's involvement. Outsourcing of work. Compliance work is being treated as a commodity. Pressure's building. I've talked about that. But the key question is what's going to happen in Australia? We have American software companies operating in Australia. And obviously we've got a very large company that started in New Zealand. They're always enhancing their software. And is this software improvement leading to a condition where there's going to be less work available for accountants in offering traditional services? And does this mean that you're going to be running around trying to secure other work sometime in the future? Why not start now? So where's compliance work headed? The pressure is, or the challenge is, are you going to be able to offer interesting and challenging work to keep your outstanding team members engaged and happy? Or are they going to be looking around elsewhere? That the accountant's daily report indicated 70% of them were looking. If you don't offer business advisory services to your clients, will they seek advice elsewhere for those services? And once they start getting advice elsewhere for capital raising, for research and development, for chief financial officer services, how long do you think they're going to remain with their current firm just for the income tax returns? I wouldn't have thought very long at all. So pressure is building. How can ESS assist you? I've developed ESS BIZTOOLS based on my experience as a partner in an accountancy firm. I had 3 partners. I was also the company secretary and chief financial officer of a listed public company. So I saw how big business operates. And big business, in my opinion, breaks itself down into a series of small businesses and places a experienced manager in charge of that team. And in that very small executive team, they normally have an accountant or a very experienced administration bookkeeping person and perhaps a marketing person. And they look after 12, 20 businesses and make sure that there is in-depth analysis and analyzing the key performance indicators, analyzing how this business really ticks. That's what I learned from being involved in a listed public company. I was also a major business advisor to a major Australian government program. It's called COMET, Commercialising Emerging Technology. We had to work with businesses all over Australia and help them become investment ready. That meant that they had to have business plans, budgets, cash flows. They already had a widget or a prototype that they'd produced. But how did they then get themselves in a situation where they could raise money? Now, those clients are out there. And they should be the clients for small and medium-sized accounting firms, I think. So we can assist you by writing material and offering videos to help you get a better understanding of these markets. We've spent the hundreds of hours, or as one of my subscribers said in a video that I produced yesterday with her, thousands of hours of material to save you having to do that. And that lady I was talking to yesterday has been a subscriber for 7 years to ESS BIZTOOLS. Keeps on coming back each year, renewing a subscription because she wants access to the updates. She wants access to the new ideas that we produce, the new videos. We have one subscriber in Melbourne who's been with us for 23 years. Why? I think it helps them enjoy offering business advisory services to clients. We've already prepared the material. Why do we do it? I like this sort of work, to be honest, helping firms all over Australia be real development partners with your clients. And that's the challenge that you have. Are you going to offer that service? And in so doing, keep your team members engaged in interesting and challenging work? If you want to know more about the services ESS BizTools can operate, please go to our website, www.essbiztools.com.au. But what I would like you to do after you've done that is to give me a ring, 1-800-232-088. And we could have a short conversation, and then I would suggest that we have a Zoom conference call, 45 minutes, no obligation. You tell me a bit more about your firm, your clients, your team, and I'll give you my thoughts on how you should go about introducing business advisory services. And I would suggest various components of our packages and perhaps some other people's products also, if I think you need them, because it's essential that you are looking at the overall situation so that you're offering services that you can use so that you earn fees from them. I want you to earn fees from the first week. We have a special promotion on at present within ESS BizTools. You sign on for 1 month and you pay that subscription, and it's your decision whether you continue to pay your subscription. So there's no lock-in contracts. What we will be doing is supplying you information, ideas, videos on an ongoing basis. Each week we send a newsletter to our subscribers. Have you thought about doing this? Did you know this? Here's a new product or article that we've included that you can use. So we're going to keep you informed of what's going on. We want you earning at least $200 or $300 a month, because your subscriptions would range between $127 a month, which is for our basic beginners program, preparation package we call, or the starter package, which is $197 per month. And both of those figures include GST. So on my reckoning, I'd like you to make $300 at least, but that is rather tongue-in-cheek, I think. You should be making a lot more than that. In other words, we want you to become productive. That means you need to analyze your clients. How many tradies have you got? We have a subscriber who's got 120 subscribers. Tradies. And he has developed a package of reviewing their charge out rates using our package on charge out rate determination, and the concept of preparing monthly financial accounts for them, and a business review meeting, which might only last half an hour. And he's generating around $7,000 per client. There's 120 of them, remember, over and above what they were all paying previously for just annual accounts and a tax return. So he's become an expert in tradies, various types of tradies. How many tradies you got? Most accountants have got quite a number of tradies. How do they set their charge out rates? Have a conversation with them and start supplying a service, because I think tradies have been an ignored area for accountants. We've looked at big manufacturers and retail stores and professionals. You can do the same thing for professionals, of course. They're very similar to tradies. They're selling labor, they're selling time. Tradies normally have a markup on external purchases they make for the clients. In all other respects, it's basically the same program, but we call it professionals. That's a good place to start, I think. So why not think about doing that? How many tradies do you have? And look at it on the overall firm basis. I find a lot of firms, only the individual partners know their details. I think you've got to look at it on an overall firm basis. Don't forget, if you want to talk to me, 1-800-232-088 is the best number to get me on. And I look forward to hearing from you so that we can set up a plan for your firm so that you can deliver business advisory services to your clients. And in so doing, keep your accounting team happy, because they will be doing real accounting work, which will keep them motivated because of the interesting and challenging questions that they will have to answer as part of that process. Stay safe, have a great day. And don't forget, if you've got any questions, please send me an email, peter@essbiztools.com.au, and I will reply to you. Goodbye.